What is going on, investors? Back again, another stock analysis. Today, we're going to take a look at Cisco Systems, ticker symbol CSCO. This company just reported earnings today. We see the shares closed the day at $48. I see it went away here on my Yahoo, but the stock is trading down in after-hours session down into this $45 level. So when we jump back into the chart, we'll see, hey, is there a spot where we can buy these shares? They're actually down quite a bit in the after-hours session. This is a stock with a $203 billion market cap. Hey, a fairly paltry 19 PE ratio. When you compare it to its neighbors over in Silicon Valley, it's actually a decent price, I guess, for the shares. And you've got a dividend yield here at about 3%, although it's probably a little higher when you factor in the after-hours session as well, if that price holds going into tomorrow. Now, the only thing I want to point out here on the broader stock chart is I hear a lot of chatter about Cisco Systems and 5G. And certainly that's something that has been talked about for a while. And so I guess the only question that comes to my mind is this stock has made a pretty monster move here over the last 5 or 6 years. It's gone down from below 20 all the way up over $50 before today. And look, maybe the 5G is already priced into the stock. So that's something you want to think about, is the 5G news has been circling around this stock for a long time. And so is that news already priced into the stock? And as we start realizing some of that potential, maybe or maybe not, it'll have an effect on shares. I personally don't know. I just think it's something that you should think about as a shareholder. Now, jumping into today's news, we saw revenues fall by 9%, and it was pretty much across the board. When you look up across all the regions, they were all down. Outside of the security segment, though, that was up 10%, but everything else was down essentially. And so this was a pretty rough quarter for Cisco. Now, the other thing that happened after the bell is the CFO, the chief financial officer, Kelly Kramer, said she was going to leave after they find a replacement. So seemed kind of sudden. I think typically these things, they have a replacement. I'm not saying this is anything company related. She might just be ready to go, or she might have some things in her life where she's ready to transition on, but typically they have a replacement here. And so sometimes with the chief financial officer, it raises some questions. I don't know if that's the case here, but it is something to think about. Now, the other thing to think about is the company gave forward guidance for Q1. So what they reported today, which we'll go over here in a minute, we've got 3 months ended and fiscal year ended. So they gave Q1 guidance and it didn't come in good. It actually came in really light, came in 9. They're looking at 9 to 11% decline year over year on that top line. And I know we've got a difficult situation going on for most companies, but a lot of people made the point that Cisco has this WebEx platform that is a competitor essentially of Zoom, and Zoom stock has been zooming and has been soaring, and their revenues and everything have been soaring at that company. So people are wondering why maybe Cisco is struggling. They also have some other products that they have competitors that are actually doing really well during the situation that we're in. And the fact that Cisco is, showing year over year declines, at least on a forward kind of basis, it has some investors wondering if not only is the current health situation getting to this company, but is competition starting to get to this company as well? I think those are some really good questions to ask. Now, we come into the statement operations here. We've got 3 months ended here, just in the most current quarter. We've got the previous period here. And again, this was the fiscal year end. So we just ran through 4 quarters. And so we've got a year over year view here. So from a total revenue perspective, again, we were down 9% in the quarter. For the year, we were down a very slight. I mean, we went from, call it 52 to 50. So relatively minor, but again, with companies like this, I think you're expecting kind of that revenue growth, or at least you're hoping for that revenue growth. Now, everything else is like just a well-oiled machine. Look at these expenses, gross margin, almost identical, total operating expenses. Oh, I mean, these are almost identical, and this is kind of what you want to see. Net income, virtually identical. And notice it actually went up in the quarter. So we had revenues decline 9%, but we had net income increase a little bit as well during the quarter. So sometimes that's a good thing. Sometimes it's a bad thing. Sometimes that's driven by cost cutting, which is not always that great, especially when you're in a highly competitive market like Cisco tends to be in. Now, from an earnings per share perspective, it's not a stat I pay attention to mostly because look, we're changing I guess this is the denominator down here. This is going down. So they're buying back shares at Cisco, which is a positive. But that's just something you want to factor in when you're taking a look at earnings per share. Now, from a balance sheet perspective, this is a really healthy company. So they had 33 billion. This is the year prior. And then we've got a year later. Now we're at, we'll call that 29 billion. So cash actually went down a little bit. It'll be interesting to jump into the cash flow statement or to see if they actually paid down debt with that cash or where that cash went to. We see that our assets are almost identical. We went from call it 98 to 95. That's not bad at all. Let's take a look down here. So we had long-term debt here. I see. So we went from 30, call it 32 down to 25. So they paid some long-term debt off. So let's see if it actually, excuse me, I was on the wrong line here. We have long-term debt here of 14.5 billion and we have long-term debt here at 11.6. So yes, they did pay down some debt. Let's see if it just went to the short-term debt. No, that actually went down actually quite a bit. Look, we went from 10 billion down to 3 billion on that short-term debt. So total liabilities. So while our assets went down about 3 billion, it looks like most of it went to the liability side because our liabilities also went down by about 3 billion as well. Very clean company. Very, this is about as pure as it gets, in my opinion, for a company of this age. I think they're doing a good job, at least on the balance sheet side. From a cash flow perspective, absolutely awesome, really. We pull our $11 billion net income down here. And then finally, we've got the $15 billion of cash flow, almost identical. I mean, this is almost like, I don't want to say it's like boring, but that's kind of what it is. It's like boring consistency here with a company like Cisco. And I think that does play a role in the stock. Sometimes, especially younger investors or higher risk investors kind of want to see a little bit more spice, a little bit more pizzazz here. We have dividends paid here. We had a repayment of debt here. We notice issuance of debt here. We did it in the last period, but we didn't do it here. We had some issuance of common stock, but it's overridden by this repurchase of stock, although it wasn't nearly as aggressive as the previous period. And you kind of hope that these companies would buy their stock when it's on a dip, when it's at a low, but it appears Cisco actually bought back shares when they were much, much higher. That's why you don't trust these companies necessarily with their repurchase programs. They're probably better at running their company than actually buying stock back. So from a cash flow perspective, everything looks relatively solid to me. Let's jump over to the stock chart. Okay, so this stock was in kind of a defined kind of chopping trend right before a lot of stocks made their low down here in March, and then boom, we were off to the races and up in an uptrend. But you notice here that it broke back in June. But what was interesting, it came down here and retested down here, and then it kind of traded sideways to up. Not quite as steep as an uptrend as what we had, but it did create another defined uptrend here. And what we see now is the stock is now down here. There's not a bar yet down here, but we're actually right here on this $45 level right here. And so what I actually see on this chart is I think we're going to have a high probability of retesting these lows here at about, we'll call it 43.68, maybe 43.75. We see we made lows in that point, and then on our way up from the rally, it actually provided resistance. This 43.50 range caused resistance here. We broke out and then we came back down. It acted as support. I think it's going to act as support again. If you bought Cisco at a higher price, you want to action in Cisco. To me, the level I would definitely be looking at is right in this 43.50, 43.75, even $44 if you want to be, pretty aggressive, $44.25. We are very, very close. In fact, I mean, if you're only buying a handful of shares here and you really want to buy Cisco, you don't necessarily have to wait. A dollar or two is not going to make that big of a deal. But if you're trying to build a significant position into this, I think you can wait until we retest these lows. And so anywhere in here, you notice we made lows here. It acted as resistance resistance here, and it acted as support here. I think it's going to do it again. Now, if it happened to break that, yeah, I think we could come all the way down to the $40 range, maybe even 40, 50, somewhere in that range. On the way up, I think you've got some green skies. If this stock can get some momentum behind it, it can get up back up to 48 and then back up to 50 as well. So that's what I see on the stock chart. Unlike a lot of stocks that we covered, this one's actually really close to kind of a support level. So I actually will put this on my watch list, and maybe this will be a swing trade, maybe it'll be a short-term thing, maybe it'll just be testing theories that I have, but this is kind of an interesting level that it's approaching. Again, right at I would say right around 43.75, 43.50, somewhere in that range is an interesting spot for Cisco. So there you go. That was Cisco Systems. Interesting stock. I'd put it on your watch list. I'd see if they were sandbagging guidance here. That's possible as well, although if this guidance comes in accurate or even worse, I think this stock could trade lower in the coming quarters ahead. So we'll see what happens. That was Cisco Systems for you. Hopefully you guys enjoyed it. We'll be back again soon. Maybe consider hitting that subscribe button if you haven't already. Thanks for tuning in. Good luck with your investments.